this again goes back to my relentless Twitter nonsense of saying all hands on deck. There is no, it's not zero sum. There is no one winner here. If you can build it, they will buy it. Literally right now, if you can produce a gigawatt of energy, there's a buyer for it. If you can produce an XPU, there's a buyer for it. If you can produce a CPU, if you can produce a server, if you can produce a networking appliance, there's a buyer for everything out there. It is an absolute arms race right now. This is just another proof point.
Founder and CEO of More Insights and Strategy, Patrick Moorhead.
6, 5.
CEO of the Futurum Group,
Daniel Newman.
6, 5.
Do we know what we're talking about, Moorhead?
We absolutely know what we're talking about.
Episode 280, Pat. We're only about 125 episodes away from finally catching up with my bench press.
There we go.
So it's not bad.
Exciting.
But,
Exciting.
well, you know, I mean, we go small here. We try to keep the numbers low wherever we can. Viewers, engagement, quality of the content, and of course the bench press, always very, very low. What do they say, Pat? If you can't do 225, you don't have a dad. Anyway, that's all right. That's all right. You'll get there. It's an injury, buddy. It's Friday morning, and where are you, in Dubai? It looks like you're sitting in front of the Burj Dubai out there in the background. Where are you at today?
Yeah, so I'm definitely not in a bunker, and maybe this is a fake background, new AI generated on our platform, or maybe I'm sitting in my living room with the view that I get. But I'm not home a lot, Daniel. You and I are both on the road. I'd love to just sit and look at this view, but I'm traveling. I'm getting stuff done, making things happen, and just trying to knock out work so I can enjoy some F1 here in Austin.
Yeah. By the way, I said 280. You know it's 281, right?
Oh, what's that?
It's actually 281.
Okay.
Well, we're going on progressive overload here, so we are pushing 281. God, you know, someday we're going to get on this thing, and like I was young when we started this thing. I'm not young anymore. That's how long we've been doing this crap.
It was really fat and a lot more fun when we started this podcast. I think
what is it? UMFA was my new thing. Make Pat fat again. Make Pat fun again. MPFA.
Yeah. Yes.
You know?
Yes. You know, I'm sorry, Daniel, but unless something tragic happens, I'm not going back. I really do prefer, you know, I love getting up at 4:30, 5, knocking out a workout, you know, just getting on it. And I'm not going to lie. I do like, I saw your tweet about Las Vegas and, you know, what you can see that early in the morning. I kind of did the same. Walking out, and you see who's sitting at the bar, what's going on at the bar. Hard to find a cup of coffee, but then you go into the gym, there's literally nobody there. You know, I mean, it's hard not to feel like a superior being as in the memes, you know, all the memes.
I'm walking down the hall, and you know, I'm going to it was the 10th floor Venetian, and it's like the 24-hour gym. It's not great, but I'm walking down the hall, and at least two with badges. So they'd been out all night.
I saw that too. Yes.
Yes. And they were out and they were just looked wrecked. And they both were going back with hookers. And it was like, you know, and it's just like, wow, you know, like, by the way, I also went to bed at like 8. So just to be, you know, so people are like, well, you need to sleep. I'm like, I did sleep. I went to bed at exactly the same time I would have gone to bed in Central Time. I went to the event, I went to the dinner, I went back to the room, and I put myself in a coma, and I went to sleep. I got 6.5 hours, felt good, got a good workout in, jabbed all the peptides. By 3:45, I was directionally feeling great. And by the way, I was up in the air by like 6 a.m. So I got the workout in, I got, you know, quickly, I got dressed, I got showered, got to the airport, and got to San Fran because I had to get to Dreamforce. Talk about an absolute nightmare is San Francisco during Dreamforce. So anyways, I
mean, Daniel, we're not giving awards out for analyst CEOs or analysts who went to the most shows in 1 week, but I'm pretty sure that you would get the award. Real quick, rattle off bullet points, all the events you attended this week.
Dell Analyst Summit, a very quick stop by NetApp Insight, Oracle World, Oracle AI World, or Cloud World, or Open World, or whatever it is today, and then Dreamforce. And then today I'm going to actually go to little. It's not really. I'm going to have one. Kind of. It's not really an event for tech, but it's an event for me. Actually, was home yesterday. It was nice for a little while. Got a little bit of work done. I always like being in the command center. In the chair.
Sure.
It's
Yep. Oh yeah.
it's really nice. I'm thinking about trying to not ever travel again if I can work. So that would be great. But
Figure that out. If you unlock that, let me know how you do it.
well, I just want to work out and take peptides. So that's the kind of the plan of what I want to do long term. But look, people like to hear our nonsense, but they really come here for the tech. So I will. I'll do the whole pivot thing now. We got a great show today. It is episode 281. We did actually. We both went to most of the same events, even though we did it in slightly different orders. We were on the ground together at Dell. You made it to Oracle after me for Financial Day. I was in San Francisco for Salesforce Financial Day. I was at Oracle for the main day in the keynotes. Um, but again, another week, more announcements. There were announcements made, maybe some that weren't, probably more in the queue. We had an interesting week from the economy standpoint. We'll hit that later in Bulls and Bears. AMD's been on fire. We're going to hit on that a little bit. We will talk a little bit more. Surprisingly, we might talk OpenAI. I don't know. We'll find a way to fit them into the story. Apple comes up this week. Dreamforce came up this week. And then we're gonna do our simulated argument once again, where I basically acquiesce to having less experience than Pat, and he takes the cake every week. I'm gonna just stay humble here, see how that goes, and then we'll hit the Bulls and Bears, the part that I like a lot. We're gonna talk about markets and why every morning we wake up to my new favorite. I have a new word that's better than nonsense, but I'm not gonna say it on the show because I don't want to get a beep, an explicit mark on our podcast just yet, but so much schmuckery going on in the markets right now. Stay vigilant, people. Anyways, all right, Pat. Look, we got a lot to hit though, so I am just going to kick us straight over. Let's go to the Decode. Well, Pat, I've been just basically quote retweeting you because you just put out so much great content at the Financial Day. You know what I love about Financial Days, by the way, is I love that we go to events and we have to sit for 3 days. And sometimes it's all worth it as industry analysts. But let's be candid, like in 2 hours, these Financial Days tend to give everything that we want. I love how fast and furious they are. And so I didn't get to Oracle's, but you did. But you had give us your overall Oracle AI world impressions.
Yeah. So Danny, yeah, I'd love for the financial analyst day to come first, and then we could do the drill down at the industry analyst days. But yeah, so I was at the event. I came in the tail end of the analyst event, spent a half day there, and then went into this event, and it was well worth it. And let me tell you why. The meme going in, and this was from The Information article. By the way, I'm going to be doing a video with them on OpenAI on this day when this airs. That said that Oracle or OCI had 15% gross margins on this big deal. And Clay basically got up there, and he's the co-CEO who runs infrastructure. Did a really good job talking about segmentation and across 4 different areas like enterprise cloud, distributed cloud, cloud natives, and AI infrastructure. And as you might expect, as I think any sane person would expect, the more value that Oracle adds, aside from capital, the higher the margins. So that's exactly what popped out, right? So enterprise, right, at 65 to 80%. That's amazing. Distributed cloud, which is more like sovereign, 40 to 60%. Cloud natives, which is kind of like non-AI, born in the cloud companies, up to 60%. And then, drum roll, AI infrastructure was not 15%. It was 30 to 40%. So Clay did a good job going through that. And I think it put the memes to rest. The other thing he did is he put up literally a 6-year schedule showing the economics of a gigawatt, right? We've been throwing that around as a unit of AI infrastructure. And essentially, for Oracle, it's $60 billion at a gross margin of around 35%. And that's blended across multiple GPUs. And so if you weren't convinced about the 30 to 40, the big boys are 35%. The other thing I want to add is apps. Okay, we used to come to Oracle Open World, and then it became Oracle Cloud World, and now it's Oracle AI World. I feel like a lot of the oxygen was dedicated to OCI, which I totally get because that, quite frankly, is where the stratospheric growth is coming from. And even the Oracle Apps folks, even Stephen Miranda, came on. It was very clear about the structural advantage that his company has sitting on top of OCI and how they deliver not only the applications, but generative AI frameworks, but most importantly, agents. Final comment here was, quite frankly, that they came out and they brought out a 2030 estimate that was very high. I think a lot of the folks in the audience has already had spreadsheeted it, and even before they gave the new forecast, Oracle was up 7 points, and I think that was based upon what Clay had said. But essentially, 31% CAGR on the revenue side and 28% CAGR on the EPS side. I love the flow through, right? This horrible infrastructure business, they still, quote unquote, horrible infrastructure business, 28% CAGR on EPS is absolutely amazing. Now, asymptotic nature of this happens in 2028. They go from 85 billion to 130. But between this year and 28, they've more than doubled their revenue, which is eye watering. And if you look at companies like IBM at 60 billion today, with I think a 5 to 8% growth. It makes Oracle just look like an absolute darling. They have to execute, right? They have to execute. There cannot be a collapse in the AI demand, which we've debated. But wow, what a juggernaut!
Yeah, there is no collapse coming anytime soon. Sorry, people. I'll let the skeptics stay skeptical. I don't know why they're so against making money, but whatever. Let them feel that way. Look, Oracle, put a mic drop moment. It was a mic drop moment for Clay. I was very skeptical of the reporting. I got called out a little bit because I'm not supposed to be skeptical of the recording of that kind of reporting. But it was very hard because, like I said, it was so asynchronous. The way they were kind of doing it's kind of the way financials work. If you kind of work back far enough, hard enough, you can find a way to make something look bad. The bottom line here is there is some big capex commits. There is some big investments being made up front. There are some limitations. Certainly, power, energy is going to be one of them. But the margins look good, and Oracle's obviously also doing a whole lot to make sure it has capacity, it has scale. It's building out these Stargate data centers. It's also partnering across the ecosystem on the silicon side. We saw this week, Pat, we didn't mention this, but AMD had another moment with Oracle that's worth noting. I mean, what did they have? 50,000 GPU commit starting in 2026. That's a really huge win for them, and it's separate from the agreement with OpenAI. Some people wondered if that was all tied together.
Great point, Daniel.
Yeah. So that was cool, but they actually announced partnerships kind of across the board. They had a Zetascale cluster with NVIDIA that they announced. One of the things that I really thought was cool was their AI data platform announcement. This, Pat, is kind of what you and I have been talking about, just endlessly, proverbially connecting the back end and the front end in a seamless manner. The future is all about letting enterprise data and generative AI speak. It's got to be in a trusted execution environment that's secure, governed, and compliant. And once someone cracks that code and does it in this sort of OpenAI like environment, that is going to be the future of enterprise software. It is going to disrupt anything in the market because that's what people want. People want a contextual, whether they want to talk to their application, whether they want to be able to type in their query. They don't want static reports. They don't want to have 5 people on staff to be able to get them a visualization of their sales funnel. You know, they want something that works the way ChatGPT works or Perplexity. You pick your poison because they all work a lot better. And I think Oracle's trying to break those silos, and it has some structural advantages between its massive data center footprint that it's building and its other structurals. It has some of the most important enterprise data on the planet that it actually runs most, half the world's businesses, them and SAP. And so I think they have the opportunity to build it. But yeah, Pat, it was I'll go back. It was just a mic drop moment, in my opinion. It was like everybody out there after those announcements was trying to, derate Oracle. And Clay just basically said, we've got the power. We've got the commitment. We've got the access to the infrastructure. We can make money from this. And now the numbers look incredibly good. AI has completely created a new way that the entire AI industry, the entire cloud industry needs to be rated. It's going to be very.
Yeah, Daniel, just a final comment on the data. There were, for a decade, cloud companies were trying to, get rip and replace Oracle, right? You don't call your database Redshift unless you're going straight after Oracle. And here we are in 2025, and you have, I'll call them database appliances called Exadata, literally Oracle's hardware, sitting in all the top hyperscaler clouds. And that was kind of a Oracle One moment. But also, in this whole on-prem versus public cloud, Oracle enabling its database to be in the public cloud, I think does facilitate the movement of many workloads to the public cloud. And we shouldn't overlook that. I mean, let's look, back in 5 years, but this is really important. And now that Oracle has this new, I'll call it an AI infused database with the ability to keep your private data secure, but also take advantage of public data, I think it could be a big deal for the company and its customers.
Absolutely. All right. There's a lot more to cover, Pat, and we've spent 20 minutes and we're only on one topic. Is that good? Is that good? Is that good?
Let's go.
That's not very good. So OpenAI had news this week and other shocking news. Have you seen that meme, the one with Bart Simpson? The one that's like, say it, Bart, say it, Bart. It's like, we announced a deal with OpenAI.
Well, yeah, Ryan had sent that one out.
I saw it somewhere, but I think it's sort of making the rounds. I wish I'd have thought of it first. Say it, Bart. We're doing a deal with OpenAI. So OpenAI had a couple pieces of news. I'm going to bring up the first one, the Broadcom deal, which this one was really interesting because there was this thing on earnings where they had that $10 billion new customer and everybody assumed that was OpenAI. They found a piece of data out of OpenAI's data that suggested OpenAI had raised 10 billion and they thought that was the 10 billion for. It looks like that wasn't what it was. So it looks like a couple of interesting things emerged. Broadcom's got another $10 billion customer buying accelerators. We don't know who it is. Some thoughts are maybe Anthropic. Some thoughts are maybe Apple. But it's someone else buying their XPUs. Super interesting. The other part, though, is that OpenAI did, in fact, announce, though, a plan to now partner with OpenAI. So that, Pat, you've got the NVIDIA deal, you've got the AMD deal, and let's take all of the wind out of those two deals and announce another deal. This, again, goes back to my relentless Twitter nonsense of saying all hands on deck. There is no, it's not zero sum. There is no one winner here. If you can build it, they will buy it. Literally right now, if you can produce a gigawatt of energy, there's a buyer for it. If you can produce an XPU, there's a buyer for it. If you can produce a CPU, if you can produce a server, if you can produce a networking appliance, there's a buyer for everything out there. It is an absolute arms race right now. This is just another proof point. This isn't to suggest that all those deals aren't awesome for those companies and don't create a great forward-looking set of metrics. It also doesn't suggest for a minute that there shouldn't be concern about who besides OpenAI is actually consuming all this stuff. But the TLDR is it's a 10 gigawatts, Pat, and we've done some math on this, right? And I mean, on a per gigawatt basis, what was it, like 30 billion, 30, 40? It's some really 20 to 30 billion or something on a per gigawatt of infrastructure. So for OpenAI to do this with Broadcom, it's another massive commitment. OpenAI is not going to get any stock in Broadcom. This was not any sort of reverse deal. It appears they are going to buy it. And anyone that knows their CEO, Hock Tan, knows how shrewd he is. So when those bills come due, Sam better have the money to pay them. I don't know, Pat. I thought it's 10 gigawatts of custom chips. And the stat that Reuters gave was that was the equivalent of power needs of more than 8 million households, or 5 times the electricity of the Hoover Dam. So there is a big commitment to custom chips. Sam Altman is not picking winners. Actually, I could say he's not picking a winner. He's picking winners in every category, and he's completely changed the economics of AMD. AMD, basically, we estimate 3 to 4% more market share single-handedly because of OpenAI's deal. And he's re-rating Broadcom, which now I think you saw TSMC came out with their earnings, and they're saying accelerator growth for the TAM for CAGR for 5 years. Pat, do you see what they said?
Yes,
mid 40s. By the way, this was in the 20 to 30 range when we put ours out, and people were telling me I was high. Like they were saying it was a double entendre. They were saying the number was high, but they also thought that maybe I was smoking I'm in Texas, folks. I can't do that here. Sorry, not legal. But anyways, Pat, 45%. So anyways, the deals roll on.
Yeah, so I guess this means that the next deal will be cut with Intel. If it's everything you can ship, Jaguar Shores and this new accelerator, this fanless accelerator. I always forget, it's an island. I just always forget the name. I guess that's next week.
You didn't see that I sort of tweeted a smirky face on Monday after the last Monday deal. I did say, does this mean Intel gets a deal next week?
I can't keep up with all your stonk tweets, man. It's to the moon, rocket ship, hodl. I'm waiting for that.
You just don't get it because you're a boomer. I'm a millennial. This is how we speak to each other.
Dude, Raging Bulls, Alta Vista, it was basically the same thing that we see here. But hey, let's
wait. Are you saying it's a bubble? Let's get it on the record.
Of course it's a bubble. It's just may not burst.
Well, no, then it's not a bubble. It has to burst. It can't be a bubble if it doesn't burst. If it doesn't burst, it's a growth. It's growth.
I didn't read the rule book, dude.
What's a bubble? A bubble, infinite bubble? I mean, till when?
I don't know.
I'm going to say this online today. I'm going to say Pat calls the infinite bubble. It's a bubble, but it's never going to burst. I think people will love you. You could put a rocket ship after that. That tweet will go viral, 100%.
Maybe I'll add a hodl too.
Come on, man. Do a little hodl. Let's quickly touch, by the way, Pat, we saw some new partnerships with OpenAI this week. Salesforce, Walmart, by the way. So what we're seeing though is, I say this with love, but can't beat them, join them. Like the idea that people, we just talked about like an OpenAI for enterprise, like a ChatGPT for enterprise. Like you're starting to see like Salesforce, Mark Benioff is like, hey, let's make Agentforce available in ChatGPT. Like, why not incorporate sales data? Or Walmart saying, let people shop inside ChatGPT. Pat, this is going to be the future. We're going to see this inside these successful models. It's happening.
Yeah, a couple comments here that I think one thing that I think people are missing on Broadcom is that Broadcom's not just delivering chips, they're delivering the entire rack. And I had talked to some people in the industry, and they're partnering with ODMs and rack providers. So they are literally delivering a rack very similar to what AMD and NVIDIA are doing. And one thing I love about the connector, the Salesforce connector with OpenAI, is the simplicity, right? I'm using the heck out of these connectors from OpenAI right now. It's literally changing my workflow and simplifying primarily right now my planning. of what I do. So good move. This doesn't mean that you know Salesforce isn't completely tied into um, their way of doing things, but I think this is just a pragmatic move.
Yeah, smart stuff. Smart stuff. So, Pat, you been watching movies on your Vision Pro lately?
I don't even know where it is, Daniel.
That's not fun. You're supposed to
No,
see.
I know,
You know,
and there's just not a lot of movies even available. Apparently the Lakers are going to be in full Vision Pro support. You can look around, look at the stands, kind of look at people, probably move around there. I think that's pretty cool. But the content absolutely uh, blows. And oh, by the way, this new version of the headset is heavier. Okay, which is one of the biggest obstacles to people wanting to use this. And I know people are saying, "Hey, um, it's all built into the headset," but man, this thing is heavy. I am glad that I'm doing my neck exercises, Daniel, as part of my training regimen to be able to wear this. No, I literally have no idea where it is. I think it's in the storage closet. It would be interesting to turn it in, if nothing else, to get the M5 in here. But no, listen, I think the big deal here is the M5 processor for MacBook Pro, iPad Pro, and the Vision Pro. The Apple is absolutely fire on processors, right? Make no mistake, right? They are showing people that with endless resources and being first in line and making the capex at TSMC, you can make some absolutely amazing things happen. And the other thing that they have to their advantage is they're a full stack, right? All the way from the chips to metal bending and everything in between, and that has an inherent advantage, particularly if you can deliver something on time, and the rest of the industry can't band together and invest more. So, hats off to Apple on that. I do think that their positioning is definitely muddy, which says, "Hey, I've got this new, M5 chip, but hey, you know what's even better? The M4 Pro and the M4 Max. But you know what the highest performance chip is the M3 Ultra. So I think, is that going to make a difference to their sales? I would say no. It is getting ugly. Is it a signal that Apple is potentially slowing down? I would say maybe. Final comment on here. Biggest thing that the M5 did is improved peak GPU compute. And I see a lot of people, a lot of developers use Macs. My son, who is an intern at NVIDIA, prefers a Mac to do his programming on. So it's going to take a lot to unseat Apple, I think, even from the developer crowd.
oh, show me those neck exercises real quick. What are you doing? Can you do a profile real quick, just so people
That
can
would
see?
be so ugly.
Like,
That would
turn
be worse
it
than
this
that.
way and show me the neck up that you're. Does Barton have you doing those?
Yeah,
You,
my physical therapist actually
okay,
has me
it's
doing
like
those.
this. Is it? Yeah. Okay.
Oh, no, I do. No, I do. What's called strong neck, or I get in here and it's actually a thing, a cone I put around my head with that's weighted.
Can you put a video up next time?
I don't know if that would be very flattering for me.
It'd be funny for me though. That's what it's. That's what I'm asking.
Of course you
I
are.
really want to see it do it. The profile shot would be great though.
I
Um,
mean, it's not always about you.
are you not entertained? I'm entertained. Sometimes it's not about anyone but my own entertainment for myself. Um, so so let's talk a little bit about Dreamforce. This all in parallel, right? So many things going on at one time. Um, big week for Salesforce, big week for Agentforce. I said about the SaaS market, super interesting, but the business performances haven't been bad, but the market basically just says we don't believe it. We just don't believe it. I saw something unrelated about Adobe. Like Adobe is, in 3 years has seen its earnings per share go up 67%, but the stock's trading lower than it traded at the lowest point in 22 during the drawdown. So the market is just kind of saying we don't believe in SaaS. And so that was the mission for Salesforce this week at Dreamforce. It was at both their financial day, but also in their analyst summit, was to really sort of, how do we counter this whole SaaS is dead narrative? And it's no longer being sort of kept hush. They're addressing it. They're saying it out loud. They're talking about their deals. You saw they made the deal with OpenAI. We just kind of talked about that. But CEO Mark Benioff was really adamant. He actually had Michael Dell there talking about their story. He's telling stories about companies like Pandora and FedEx and Web Sonoma. Talking about 12,000 Agentforce deals that the company's doing. It's one of those really interesting things, Pat, and you've heard me talk about this a lot. Like, there is going to be some sort of software consolidation, like the industrial complex for software. Like, people are not going to want to pay for agents in every application. At some point, they're going to have to pick an agentic platform. It's going to be one of the mission critical ones, whether it's at the infrastructure layer, the platform layer, the application layer. But they're probably not going to buy agents from 20 companies. They're going to want one agent orchestrator that's going to work across all the data. That's what we talk about, the Oracle AI platform. And Agentforce is attempting to do the same thing. The structural advantage I see for Salesforce is just the entrenched customer. They are the interface to the customer right now. And, having that in early agentic use cases, which are a lot of them are customer experience, their chat, their interactions, their sales, it definitely gives them an opportunity. But I also do think, the rise of the Google Gemini for Business Enterprise, the rise of OpenAI basically being a unit app, wanting to control and do everything for people, is going to put some pressure. So the job of Salesforce was to prove it will grow and succeed. They did put out a new model, Pat, of about 9.6% or so growth, 60 billion in revenue by the end of the decade, while also having doubled their margin over the last few years. So that was really positive, a thing that came out of their analyst day, the financial part of it. But they also, the event was all about agents, though, all about Agentforce 360, basically giving customers that enterprise grade AI agent app that works. And they're very focused on kind of human in the loop. And what's the story? What's the differentiation? And where are they really leaning? They're leaning on the fact that you can't do this stuff in a trusted environment on any of these open platforms, meaning that you need a platform like Salesforce to deal with keeping data safe, keeping it proprietary, keeping the right data from being shared with the wrong platform or the wrong data collection, and the security of it all. So, really at this point, the apps companies are all in on this trusted execution layer. And that's what has to happen in order for these companies to maintain and stay, on a growth trajectory. Is 9.5 to 10% growth annually enough, Pat, to excite the market? It definitely saw a nice boom, but it saw a nice immediate, because I think the market was starting to wonder if there's growth at all. But having said that, I think over the long term, when you have businesses, OpenAI's revenue is expected to be 150 billion, grow from 10 to 150 billion in the same period of time, that Salesforce thinks it can grow from 40 to 60. It's an interesting juxtaposition these companies are in, Pat. I think that they did a good job. I think they made some good announcements. I think they're showing some success with customers, but I do think there's some real proof points that need to be made at this inflection for Salesforce to continue to grow, but also change that sort of narrative that's just really pinning down not just them, but this whole space.
Yeah, the entire software industry is in an awkward position right now. And, it's interesting, Daniel, every successive conversation that I have with a CIO or a CXO, they're getting more bold in telling me what they want to do with software, right? I literally talked to one this week that said that literally the plan of record is in 10 years to have no enterprise software. And, we're putting together the steps in order to do this. And, it's a long journey. And then I think the way this happens is there's this decision point between time to AI, and I'll use Salesforce as an example. Do I pay the extra money to get the generative AI magic on top, or do I build that myself with, let's say, an agent from Microsoft or Google? And then it goes, kind of a step further, which says, uh, you know, do I just freeze my implementation and look at this thing like a database? I keep paying the fees on it, but the lowest bare minimum. And then the next step is to come up with a data lake that has the data in there, and you're literally just querying it. Some companies that they're just at different stages here, but I'm seeing companies get bolder. I do believe that if you want time to AI, time to market, going SaaS is a good solution. And the reality is that enterprises aren't going to just standardize on one agentic orchestrator. I just don't see that as a reality. Like, what has any large enterprise standardized on? Like anything, right?
But is
Like,
it
oh,
is it a few? Is it 20? I mean,
no, 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 no. It's like two or three.
it's like the
It's like
cloud. It's going to be like multi-cloud. How that in
that's exactly right. And there is a scenario that says you have front office, you have a front office orchestrator, and you have a back office orchestrator. And the rigidity of the back office tends to be a lot higher. I mean, my gosh, even looking at an enterprise's data mesh, it's like they're all different. And even if you had the magic product that could pull it all together, it would still be different. One topic that I did want to bring up that we haven't talked about yet regarding Salesforce got into the ITSM market, right? Like, to compete directly with ServiceNow, and both companies are impinging. ServiceNow brought out a CRM product at their recent a Big Tent event, and we're going to see a lot of this poaching. We're going to see a lot of this, but I do think ultimately we will see some consolidation in this market. We will see some acquisitions. We will see some smaller SaaS companies just completely go out of business and go bankrupt and get scooped up and integrated in here. On the big companies, their valuations have to go down significantly. I do think it's a stretch if Salesforce thinks it can be the orchestrator for all enterprise workflows, right? Like for ERP and SCM and finance. I don't see that. It's not because technologically they don't have it. It's just about the way that people look at Salesforce, right? You go to their show and they've got teddy bears and rainbows and green grass, and I think a lot of those back office people look at it and they're like, "This is not a serious company, right? I need a serious company to do this, like an IBM or somebody like this to be able to do that."
Yeah, it'll be very interesting to kind of see how this all plays out. I do believe there's going to be a lot of consolidation, but I don't think either it's going to be one. And even if it was to get to that, it's not going to happen instantaneously. It's going to be a step function. There's also likely going to be a hardware infrastructure orchestration layer, for instance. Like, you'll see a certain orchestration of agents that are actually managing all your infrastructure that could be very different than the ones that are going to be managing all your business applications. So we'll kind of see where this all lands in the end, but it is fast changing, Pat. It makes for good TV. So let's hit, Pat, our the flip. It's the fun part where we like to go after it. You argue one side, I argue another side. You get it right, I basically put my tail between my legs, and we walk into the sunset together. But let's talk about something we already talked about today. Oracle showed some numbers, some big numbers, that all of a sudden don't really have them as the fourth or even the third cloud. There's an argument made that they could become number one, Pat. So, can Oracle really challenge AWS, Azure, Google in the AI cloud era? Let's see who says yes.
My gosh.
It's you, dude. You are the one that has to somehow convince the world and defeat your arch enemy, Daniel Newman, in this debate that Oracle will overtake the big three clouds.
Yeah, I mean, this is going to be really easy because they can absolutely get to number three. I think number one and number two. I don't see that happening. Although, interestingly enough, if you look at AWS at $240 billion based on a 15% CAGR from 2024, it puts them at around $240 billion in valuation. Sorry, term total revenue. And you look at Oracle, we'll be at 225. So it could hit that, but I don't think AWS CAGR is going to be 15% that people have been modeling for them. Google, on the other hand, very much right. If you assume a 25 to 30% CAGR from the current, I think it's like $75 billion run rate, Oracle gets ahead of Google by I think 2020, 2029. I didn't do as much research as I should have coming in here, but to me, it's about the proof points. Like how did this happen? So first of all, Oracle got in late to cloud. Version one of OCI was not good; it was horrible. They brought in Clay and a complete new re-architecture of the entire platform. They started off with bare metal, which the other larger cloud providers had to back into. And the other proof point, I think, is that if you look at now, every one of their competitors is big in data, but that's Oracle's bread and butter. And if you look at the ability to pull that data in and the moves that they've brought in and the expanding amount of object and file data for the AI age, I think that is another proof point that while I think, again, Microsoft and the other hyperscalers have data products, but this is large, gigantic amounts of data. So, yeah, to me, it's pretty simple just looking at the projected growth rates for the cloud companies. At least my math says that Oracle will come in at number three.
Well, that isn't all that compelling to me. The real question was, can they beat them all? And so I appreciate you making a strong argument to agree with me in advance. I win, mic down, dropped. In serious though, look, Oracle's had its run. It's made some great announcements, but it's won on being the cost leader. It's coming at it from a standpoint of being efficient. What they don't have yet is all the bells and whistles and all the tools and all the software and all the developers. And so what I think they are going to be is one of the AI clouds, but they're not going to be the only AI cloud. And let's just be candid. There's a lot of deals that haven't been announced yet. So what we're doing right now is we're playing whack-a-mole with the deal making. So Oracle made its deal. Everybody knows how much OpenAI it's getting, but is this to suggest that OpenAI isn't going to go make other deals? Is this to suggest Anthropic, which by the way is pacing next year to have almost the same revenue as OpenAI, and is closely knitted to AWS, isn't going to create some huge acceleration within AWS's revenue, which really hasn't seen any AI acceleration because they were so far behind on infra. But they have that huge structural advantage of the customer base that they already have. And when all of a sudden that customer base starts turning on AI, all those enterprises start turning on AI, I think their number is going to accelerate faster. So the problem here is just like we talked earlier about the TSMC new numbers re-rating AI growth. We hear about new energy numbers re-rating AI growth. We hear about new fab and foundry numbers, wafer numbers, new memory constraint numbers. Every day there's a new number, there's a new deal, there's a new expansion. Well, Oracle got theirs early, and therefore their number and projections are more clear and the future is more clear to them. Other companies and other ones of these cloud providers haven't even announced their deals yet. When their deals come through, they're going to get the same sort of lightning in a bottle. There's going to be new ratings. And if Oracle doesn't have some more deals to come behind this, Oracle is going to quickly fall right back to where it started at number 4. Not a bad thing being number 4, not a bad thing at 35% margins, not a bad thing having 4.6 gigawatts here in the United States and a whole bunch of a whole bunch of NVIDIA, AMD and Broadcom chips. But unfortunately, Pat, all these other cloud providers probably still have a few aces up their sleeves, which when they come out, people are going to realize that Oracle got the first wave of growth, but they won't get the last.
All right, you win. I'm going to go dark. There I go. I'm in the light again. That was good.
That was fun.
What was fun is I re-looked at the question after we were done, and I had to argue that they would overtake Azure and AWS.
Yeah. As I said, you kind of left me, you kind of gave me the win before I even started, but it's still a fun debate. They're having a good run. Let's just put it that way.
Yeah, the one thing they are going to have to figure out, and they have, when I talked to Oracle, they just completely shrug this off, is where's your first party silicon, folks? Where is it? You're going to be at a cost disadvantage in the long run. With Azure really hasn't done anything with its custom silicon that meaningfully yet. They're playing this is hard, and they've got to invest more years into it. But I just don't see how they'll be cost competitive on the compute side moving forward.
It's interesting, Pat. My predictions are starting. Did you hear about the ARM Broadcom partnership? They were going to do a chip. Who's that for? Something
OpenAI.
For OpenAI, right?
Yeah.
But what I was saying is, my other prediction was that there would be an ARM Broadcom collaboration for a Oracle specific OpenAI chip that would be fabbed out by Intel. So we're getting closer. The OpenAI ARM thing is moving forward, the OpenAI ARM Broadcom thing. Oracle's obviously Stargate, so there's a lot to be said about that potentially being where they'd house a lot of this stuff. I don't know. I think Oracle will do a chip. I've heard the rumblings that they will. I think it will happen. And Pat, at the speed that Oracle's moved versus the speed that Microsoft's moved, Oracle's not that far behind. They're what, a year, maybe two?
Oh, from a custom chip?
Yeah, behind Microsoft, not behind all of it.
Oh,
because Microsoft basically scrapped and had to restart. I mean, they
did, and the one thing that needs to be mentioned is the alliance with Ampere. I'm convinced that most of the SaaS apps are running on top of Ampere, and not x86. Somebody pulled me aside at the Financial Analyst Day and literally told me, "Hey, did you know that Oracle doesn't buy any Intel? They're all AMD." Anyways, I don't know if that's fact. I need to go do the double click on that moving forward. I'd find it hard to imagine that they don't have Intel when they're serving up some enterprise applications, but we will see.
We will see. All right, buddy. Let's get to the last part. This was an interesting week. Turbulence all around in the markets. Let's do a little bulls and bears. Man, Fridays are really something. Last Friday was Capitulation Friday. There was a Trump rant. President Trump went on a rampage. We're in a new world. We don't pick up the phone and call our political partners and adversaries and talk. We just tweet, apparently, or truth our posts, and then they get reshared on Twitter. But there's got to be like a Trump algo out there that, like, when he shares something, the algo instantaneously creates buying, selling pressure. Because last Friday, after he said more or less that Xi Jinping was, holding back rare earths, asking for special licensing, and starting and escalating a trade war, that started a selling motion. And then he came back with a second post that said something like 100% tariffs on November 1st. And it just sent the entire market cataclysmic. It was like the world had ended. You saw things falling so fast that you would have thought that we were back into April, first time ever doing this Liberation Day type moment, Pat. We know we have an issue with rare earths. We know we've overtly created an overdependence on China for the processing of these. It's not necessarily that they get them all there. It's the processing of these, and then it's the ability to get them back. And having access to these rare earths is critical to industries like EVs. It's critical to chips and semiconductors. It's critical to many things that we need, Pat. And so, interestingly enough, though, only what a handful of, I think it was Saturday morning, President Trump started the de escalation process. Sunday night, the markets ripped. Monday, Tuesday, everything went up. Wednesday, we heard there were some issues with credit, and maybe this thing with Xi Jinping isn't over. Markets went back down. I mean, Pat, what is all this schmuckery that is going on out there with U.S. and China? Are we back in it, or is this just like we are just waiting for headlines and completely erratic at this point?
You're so funny. Like you took this entire topic, but yeah, let's go. So last Friday, I got up on CNBC market with John Fort on overtime, and Trump hadn't done his olive branch yet, and I literally said, "This is all nonsense." Check the last 6 or 7 threats that happened. I don't see that this is going to be an issue at all. And you're right. And then Trump came back and notice that. So net, I just think this is complete nonsense. And to try to trade based off of this and do the whipsaw, I don't know. I guess if you're a trader, you have to trade and do things like this. But in the end, I just think this is going to be all nonsense, and we will arrive at something. Note the rare earth proxy, which is, hey, if you have a subsidiary or something like that, was done at the same time that we clamped down on chip equipment commitments to those who are on the entity list. So if you had a JV or something like that inside of China, you were a Chinese company, or there was an affiliation. So we cut that off. So this is a tit for tat battle. A couple things also hitting as well. Even though I believe about 50% of what comes out of the WTO, there was a forecast that said, hey, we're going to take a 7% global GDP hit for 2026. So yeah, it I don't know where this thing's going to end. I think it'll be a negotiation. If you look at Trump and the way that he works, I mean, he's a negotiator, and I think at the end of the day, we will get there. The I would call the barriers on the left and the right, the guardrails, are going to be all about defense, right? China is the U.S.'s biggest nemesis at this point. I think vice versa, and that's the one thing that could keep what I would call a rational deal from moving forward.
Yeah. So sorry I took that whole thing. I'm just so excited. So excited. Yeah, we are definitely, there is a lot of whipsaw out there. I think if you haven't learned by now, though, it's just emotional chess being played, and every escalation comes with de-escalation. Every de-escalation comes with re-escalation. And by the way, it's a great way to kind of, help your funds get into Bitcoin at low prices. I don't know if that's true. I'm just kidding. Having a little fun, Pat. We can't get so serious all the time. But let's talk about a serious bullish call. TSMC, man. TSMC absolutely crushed it. And this is a bellwether, Pat. Like, it really is an indicator of everything that's about to happen. It's a pretty good indicator for a few quarters ahead. Their guides, really great indicators of the year ahead. And when you look at kind of all the calls, there's I don't know how you feel. I think I've now answered the "is AI a bubble" question on TV no less than 12 times in 2 to 3 weeks. You look at the stuff that TSMC is saying about this space, and it's maybe there's a bubble, to your point, an infinite bubble. I mean, maybe there are, and I've said this publicly, there are definitely drag-alongs in the market, companies that are getting incredible runs that are you're not even an AI company. You're not even doing AI. I don't know why you're up 8,000% right now. But down the stream, Pat, from raw materials to anything for chip making, through anything that basically builds a server, to construction, to data centers, this is not a short thing. This is not going to stop in 2026. Every indicator, and these numbers from TSMC, for instance, indicates, over the next 5 years, we're going to see category growth and expansion at a incredible rate, higher than almost every forecast that's been put into the market. When I said our $583 billion number is starting to look increasingly like between pricing power that these companies are going to have, basically everything that can be made will be bought, and the actual implementation of all this stuff, we could see the accelerator numbers with memory all in and networking go to $1 trillion just with cost power. The cost power that they're going to have. You're seeing memory constraints, Pat. You remember 2018, that period of time for memory and how constrained to get. They're thinking it's going to get worse, which means that if you don't have a long-term agreement right now for HBM and you don't have enough HBM for what you intend to produce, you're not going to be able to get it. Which that's going to give Micron and it's going to be creating incredible pricing power, incredible growth. And of course, TSMC holds all the cards. I mean, is there a company that holds more cards? I mean, I guess you could argue ASML, but that holds more. I think we'll talk about that in a minute. But so they're expanding capacity here. They're going to build out more in the U.S. here in Arizona. Still doesn't solve our problem with U.S. IP, but the overall performance, Pat, of TSMC is a beat on every line. It's a beat on.
Yeah. So hey, I'm going to challenge you a bit here. TSMC did not issue a forward guidance on CapEx. And the whisper number is for a whopping 15% growth in 2026. And let's say best case 50 billion. So that's a 20% growth. So if it's the bellwether and we're looking at 20% growth, I mean, I guess that's good. They did talk about land that they were buying. To me, that's probably the only factual predictor that we have that they would look at expanding. So I hear you, Daniel. I'm into
it's a fair point. Their revenue guide and their estimated guide, the 45% accelerator guide.
Oh, right. That's based on CapEx they've already committed to.
Correct.
So,
but that's through 2030. So what are you talking about? That the lack of CapEx is going to slow that down after 2030?
No, I'm just saying that there's no commitment for CapEx. So should we believe that revenue number? I mean, I guess we should. I mean,
obviously, a guide's a guide, and they could always be wrong. But TSMC is not typically a company that is emboldened with its guidance. It's not typically a company that tends to run out in front of its capabilities in terms of the way it tells its story. Look, there are holes to be poked at some point, Pat. Like the obvious ones, like I mentioned with memory. Like you can't get enough memory, you can't get enough wafers, if you can't get energy. Like if you can't actually build the amount of energy we're going to require to build all these data centers, like these are real problems. Like that is a problem. But in the supply demand type curve, that's probably going to drive pricing up, revenues up. And it's going to create, it's not like their factories or fabs are going to stop. They're just going to make everything they can. So then you can start basically enumerating that it's everything they're able to create with all the pricing power. So their growth may not come from volume. It'll come from having more pricing, because we know that every chip NVIDIA makes, every chip AMD makes, at least for those two right now, and pretty much Broadcom on the AI side, are being committed. So unless that infinite glitch of money suddenly runs out and nobody's willing to fund these things, it seems that there's a path to a really bright future. And yes, I'm incredibly optimistic. What I'm most concerned about, which is funny because you're not, on the other side of this, is when AI is doing all the work that humans do, where are the consumers that create 70+% of the economy? That's the problem that I'm actually trying to figure out. Is we build all this AI, how do people get money to buy stuff? Yeah. So we both have our bearish themes. It's just this part seems to be pretty well.
Hey Daniel, just to be crystal clear, I don't, what I consider my comments on TSMC aren't bearish. What I'm just getting to is the facts. The facts are they didn't increase their CapEx, and their forecast, I believe, was for that 30% growth was not for 2030, but I'll have to go back
it's a 5-year average. Was what
I'm going to have to go back and
I have the quote here. I think it was a 5-year. There could be upside to its expectation of a mid 40% CAGR for AI accelerators through 2029.
Okay, I was looking at their overall revenue as
Yes, I'm
opposed to.
specifically talking about AI accelerators.
Okay, yeah, it's interesting. If you look at the chip industry in totality, the benchmark is applied materials because they operate in a lot more of these categories. But anyways, I think we've drained. I think we've drained this topic for everything it's worth. ASML brought out earnings as well. It's exactly what you thought it would be. Good discipline on margins. They echoed what TSMC said. I mean, obviously, they're the at least lithography darling for EUV and NAEUV going into the future. They're echoing that. Now, that's balanced by the pullback in China, which should be a surprise to absolutely no one. Daniel, anything else interesting about ASML that you
No,
saw?
but I think to your point, they are a great one to watch for that 5+ year horizon. Are the foundries buying the capital equipment that's going to be required to because ASML is the one stop for the leading edge. So keeping an eye on ASML's performance and their order flow is always a good way to indicate what's going to happen in the future. These things can't be stood up quickly. They can't be stood up quickly. So, Pat, it was a good show. I feel like it's just another week, and next week, I don't know what the hell we're going to wake up to on Monday morning, but it doesn't seem to ever stop. So I hope you have fun at F1. We won't be together, but we're both going to make an appearance, which will be great. I'm also going to try to actually stay home a little bit this weekend because, frankly, next week's another big week of travel, followed by another big week of travel, followed by another big week of travel. It's going to be pretty relentless now through Thanksgiving, at least, or a little bit after Thanksgiving. So
Yeah, it's week 4 for me. I've got four more weeks to go.
stay strong. Don't get injured.
Well, I already did that.
Don't get any more injured. Um, and then you have a good weekend. And all of you out there, all of you that are watching this show, you probably caught this after our weekend. So you'll have to check in next week to see how much fun we had and what the heck happened this week, what announcements and what deals are going to come down the pipeline, how big this bubble has gotten, and is the infinite glitch ever going to run out of money? I wish I had the infinite glitch, Pat. Hit subscribe, be part of our community. We appreciate all of you so much for tuning in. This was episode 281 for this week, though. We're saying goodbye. See you all later.